when you start trading, all you can do is learn from other people. And the nature of human beings is that if someone's got a convincing story about something, then it's quite easy for us to sort of buy into that, and especially if there's a group of other traders who are also trading like that.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders podcast.
Hi there, it's Walter here from the Two Traders podcast, and Darren here is on the line. Good day, Darren.
Hi, Walter.
Well, Darren, we're going to talk about frequency of trading and how often your trading system trades and what that means for you and your performance as a trader. I've had some of these questions come through. It's probably one of the most frequent questions that I get, or complaints, I guess you could file it under, which is, hey, Walter, this looks good, but like you never trade and you never take enough trades. And one of the reasons why I've taken this approach, Darren, is because I've noticed that historically, if I go back and look at my trading record, typically the more often I trade, the worse I do. In other words, the lower time frame I trade, the worse I do. The more trades I take, the worse I do. It's almost like if you're trying to shoot a target with a bow and arrow, and you've got a stack full of arrows, and you've got 300 arrows, and you know you've got 300 arrows to hit the bullseye, you can keep doing that, and there's nothing wrong with that. But you have to understand that your win rate, the likelihood of you hitting each arrow there is probably going to go down. I mean, you're eventually probably going to hit it, hit the bullseye, that is, but it's not one of those things where in the Olympics, what do they do when they shoot for the target? What they do is they pull the arrow out, they envision hitting the bullseye, they have this whole ritual that they take for every single shot that they take, and then they do it. And that's kind of the way that my training has evolved into. And I know it's completely different to the way that you trade. But what typically I get is, hey, Walter, I don't understand why I would do this because I don't get enough trades. And I think normally what that means is, it's another way of saying, the trader is basically saying, I want to trade more often because I have $2,000 to trade and I want to turn it into $2 million over the next 10 months. So the only way I know how to do that is to take a boatload of trades, and that's really what's going to get me to the promised land. And I think that's the wrong approach. I think for a number of reasons, it's easier for many traders to just slow it down, concentrate maybe on one pair or concentrate on one system, and then multiple pairs. But either way, you've got to concentrate on something, whether it's a specific setup, get really good at that setup, and then use that setup across a number of time frames and a number of markets if you'd like to. Otherwise, I would suggest that you just focus in on one pair if you do want to take a lot of trades. Either way, I think that focus is really what's going to pay off for you. So I'd be interested to hear what your thoughts are, because I think they're going to be a little bit different on the frequency of trading.
Yeah, well, I wonder with you if the reason low frequency trading, if that's what you want to call it, works for you is it because you're trading only good setups and that's what's working for you, or is it because you're comfortable trading less and because you're more comfortable in that environment, you're having more success? My personal belief is it's probably because it suits you more than it's a particular edge to your strategy. So I think you could probably trade your style of trading and trade more frequently and be just as successful if that kind of suits you. But I think it kind of cuts both ways for traders. I think there's probably as many people that need to trade frequently as there are people like you who like to, perhaps take less trades and not be in the market so often. For me, with my sort of beliefs on, the significance of entries anyway, frequency is not an issue for me, and I'm pretty much always in the market. I can't think of much time when I'm actually out of the market, and that's because I'm not focused on the entry. I'm focused on managing the trades once I'm into them. So I just, what is your belief? Is your belief that your system works, your success is down to the fact that you're picking good entries, or do you think it's as much down to the fact that you're trading in a way that's comfortable for you, i.e. not taking too many trades?
Well, that's a great question. I think most of the traders that I've come across have problems with overtrading. In fact, I'd say it's roughly 20% to 80%. So 20% of the traders have a problem pulling the trigger. 80% of the traders have problems pulling the trigger too often. And so that's why I've and I'm definitely in the 80%. When I sit down and take a lot of trades, a couple of things happen, especially if I'm moving to the lower time frames. First of all, I can feel the different physiology which happens in your brain. You know the difference between taking a trade on the 5-minute chart and a trade on the weekly chart. It's not even the same thing. It's like comparing, soccer with a bunch of 5-year-olds to soccer in the World Cup, right? I mean, it's completely different. The strategy, everything about it changes when you move to a lower time frame. And so that's number one. The second thing which you bring up, which is an interesting point, which is you say, I don't really believe in the edge or the power of taking a really good entry, which of course is different to the way that I view it. I view these potential trades as, let's say you're a single guy and you're looking at dating. So when you're looking at dating someone, you think, okay, well, am I attracted to her? Or, I don't really like brunettes, I like blondes. Well, let's see. Is she tall enough for me? Or I like him a little bit taller than that. Do I like her curves? Do I like her legs? Do I like the things she's interested in? Oh, she likes football like I do, or she likes surfing, or she doesn't like to travel. She hates getting on airplanes. That's going to be a problem. So it's kind of like that when I'm looking at trade setups. I'm looking for the perfect date. And I know that's not the way you do, because you just take them all and roll the die, and some of them are going to work out. Because that's you're trading your beliefs, like I trade my beliefs. So I do believe that if you are picky, you can increase your win rate. And I think, looking around at other traders who've taken a similar approach, like in the forum, Rima has done some testing, and he's found that his testing shows that his weekly chart trades have a higher win percentage than his daily chart trades. Now, is that because he actually is better at picking trades on the weekly charts than the daily charts? Or is it some sort of anomaly and it just happens to be the case that at this moment showing a higher win percentage for the weekly chart trades and a lower win percentage for the daily chart trades? He's still making money in both cases, but maybe it's just at the point where he's just seen so many weekly winners that it's just slightly above what the real mean is for the average win rate or whatever. That could be something also that's going on. But I tend to believe that most traders would be better suited to slow down, take fewer trades, and just concentrate on one thing, which I don't think is necessarily very different from what you do. I mean, how many pairs are you currently trading actively? Would you say it's one pair, two pairs?
Just the pound dollar, one pair.
Yeah, exactly. And that's kind of my point, is that most traders, I think, my beliefs are that most traders, if you want to take a lot of trades, then just focus on the pound. Just focus on the Aussie. Pick the one that you're comfortable with, and just do it. Trade the heck out of it. But the other side of that is, if you don't want to do that, if you don't want to trade the pound on the 1-hour chart or on the 5-minute chart or the whatever 2-hour chart or 30-minute chart, if you don't want to do that, and instead like, for example, a lot of people listening to this probably have a job. They probably are not a full-time trader. That's just the odds, right? So if you want to manage your trades easily, one way to do that is on the daily time frame or the weekly time frame, because there's no point in sitting around waiting for a daily candle to close. And there's certainly no point sitting around and waiting for a weekly candle to close. So you can easily manage those trades over a few minutes or hours a day, maybe an hour a day max. You could manage your daily chart trades, and you could trade 30, 40 different markets with just one specific setup on the daily charts. And you could literally spend 45 minutes a day engaging in those trades, setting those trades up, managing those trades. That's not a lot to ask for someone who has a full-time job and still wants to trade. So you'll have plenty of trades if you want to broaden your horizons and just trade one simple system. So I guess to answer your question is, I think most traders would benefit from trading less often, because most traders come to me and say, I've got this overtrading problem, or they've got a problem that's related to overtrading and they don't know that it's overtrading. very few traders come up and say, I have a real hard time pulling the trigger. That's quite rare. And then the other thing is, my beliefs are that you can increase your win rate by waiting for the right girlfriend. Just like if you're waiting for the right wife, or whatever, or husband, if you're waiting for this perfect thing, this to appear, if you're picky enough, it will appear. You will eventually find it. You don't have to settle for something less. So those are my beliefs. And I know it's not for everyone, but I guess I would have to say, yes, I do believe that it helps your trading, or it helps my trading to be picky. And it also is nice to have a lifestyle where you don't have to look at the charts every 4 hours or every hour or whatever, or what have you, or sit down and trade. Like some people I know, they'll sit down and trade for 5 hours a day. They sit down and they'll trade from 8 a.m. to 1 p.m. in Europe, and then that's basically what they do. They're looking to take 2 trades during that time period. If they get 2, that's great. If they don't, that's the end of the day, and then they go on to tomorrow. So it just depends on really what you're looking for, I guess.
I think we're obviously got different sides of the coin, with our approach to trading right now. My belief is that all of those elements that eventually work for people are kind of grounded in their beliefs about what's going to work, and that is ultimately what's going to get them to the point of being consistent with their trading. And it's quite funny with the traders that are trading my particular entry. The problem they have is not taking entries, because they start to add analysis into the entry that shouldn't be there, basically. Perhaps come through like they've learnt trading with that sort of style of doing analysis. I agree with what you say about the advantages of moving to a higher time frame. From my point of view, that is because you're reducing the amount of decisions you need to make. Generally, what I find is that people's errors come in at the decision points, and they add biases or stuff they've learnt in the past that's not relevant to the system they're trading now, and so they make bad decisions. And I think the more of those decisions they have to make, the more likely they are to make mistakes. So I agree in that respect that moving to a slower time frame can produce better results. What I don't believe, and which I did used to strongly believe, is that there is some statistical advantage in slower time frames. Again, I think it's so hard to prove that I'm just kind of like not going to believe it.
Right. So basically, what we're saying is, if someone were to go out and test a particular system on the 1 hour charts and they found a 52% win rate, and then they were to test the same system on the weekly charts and they would find a 65% win rate, that what you're saying is that's just happens to be the case because of the sample that they have. And if they had a different sample, maybe those numbers would be reversed or something like that.
Yes, yeah. I think it's just down to the sample. For instance, price action. If someone tried to argue to me that price action on a weekly chart is more likely to play out the way you expect than it is on the 1 hour chart, I would find that really hard to buy into.
Right. So what you're saying is the reason why these things appear is because people have to make more decisions on the 1 hour chart than they do on the weekly chart. And so there's more opportunity for tripping up.
Exactly. And also visually, when you look at a weekly chart compared to a H1 chart, a H1 chart looks much more complex with many more candles in it, and because you've got less in the weekly, then things like support and resistance appear to be more significant, etc., etc. And I think my sort of train of thought nowadays is going down this, I think how we interpret trading visually, because of how candlestick charts appear, I think leads people to make lots of assumptions that aren't necessarily true. And if you compared it to just sort of seeing the price kind of moving up and down abacus styley, as opposed to having like the timeline as well, I think visually they're so different. I think that the visual aspect of how we trade leads people to make assumptions that can't necessarily be proven. Do you understand what I mean there?
Yeah, I guess my question would be, if I'm making decisions that are wrong because my beliefs are leaking into them, why is that important? In other words, my belief is that you should first uncover what your beliefs are about the market and build your system around those beliefs, because you will always end up back with your beliefs. And if I trade Darren's system and I decide, well, this is the greatest thing I've ever seen, I'm going to trade Darren's system. Well, what will eventually happen is either I'll have a poor period, poor performance at some stage sooner or later, or I will just lose faith in it for whatever reason, maybe because I missed out on some winning trades for whatever reason. And so what ends up happening is I modify that system to fit my beliefs. If it's an issue for a trader to be trading his beliefs because he's allowing those to sink into his trading system, my response is, well, why don't you just trade your beliefs? I mean, why not build from there? You know what I mean? Like, how does that help me to move or repress or move away from my beliefs and stick to the true system? I guess that's my...
I think half the battle is finding out what you really believe. And that's half the battle. And I think initially you kind of go along with other people's beliefs and you kind of try and, become the sort of same trader as the person you're learning from. If you look at how I'm trading now, I'm not following any of the rules that we're told that we're supposed to follow with regards, risk management, position sizing, risk to reward. Any of those things that I used to, use, and I thought I believed in them, but, maybe I was just trying to, become like someone else, really. And it's only kind of when I got to the sort of core and sort of built up my own beliefs from scratch that I started to sort of improve dramatically. So it's a difficult one, really, isn't it? Because when you start trading, all you can do is learn from other people. And the nature of human beings is that if someone's got a convincing story about something, then it's quite easy for us to sort of buy into that, and especially if there's a group of other traders who are also trading like that. So it's quite difficult to kind of be really open-minded about trading when you start out, because you kind of have to go along with other people. Really now I kind of look at the charts and I kind of see them in my own way. And I think to some extent we've all got to do that, and I guess you have as well. You've clearly got a really strong rooted belief that how you trade and the frequency of your trade and the type of technical tools you use to trade, you've got a rock solid belief in those now, and you kind of have to get there. You kind of have to have your own thing. So I'd be very cautious about this whole idea of undertrading, overtrading. For me, I think you kind of got to find out for yourself what works, really. And so I'm very cautious about saying you shouldn't trade a lot or you should trade a lot. Really, I think you should just be open-minded and play with the whole thing and try some stuff out of the box, and eventually something will click for you.
So that's the end of part 1 for the Trading Frequency podcast. In part 2, you'll hear how Darren and Walter focus on different aspects of the trading game. You'll see why Walter's traders have difficulty with overtrading, while Darren's traders have difficulty pulling the trigger. You'll also see what you must keep in mind when trading Darren's system, and why how you find your profits with your trading system is entirely up to you. Also, you'll see why you may or may not marry your dream girl, and how do you know when you need to re-examine what you believe in. Also, Darren and Walter tackle this issue. Is there really any proof with any technical trading systems? All this and more in part 2.